All right, welcome to today's Explainer. We are jumping straight into a totally fascinating, incredibly high-stakes topic today: institutional order flow and market mechanics. Specifically, we're going to break down this hidden phenomenon known as the compressed AB spring. Now, if you've ever felt like the live market is just playing by a completely different rulebook than the one you actually studied, well, you are definitely in the right place. Let's get into it. So let me ask you this. Why do textbook ABC waves so often just completely fail in live markets? I mean, it's a massive pain point for so many of us. Retail traders are constantly taught to hunt for those perfect, symmetrical A to B to C wave patterns. You expect a clean, rhythmic cycle, right? You want that aggressive push, a nice, deep, breathing pullback to jump in on, and then boom, that final expansion push. But how often does that actually happen perfectly? Honestly, way too often. Everyday traders just get trapped sitting on their hands, waiting for a perfect discount setup that never actually materializes. And look, the reality is this. The live tape is rarely textbook. When major institutional algorithms are in a violent, desperate hurry to accumulate an asset, they simply cannot afford to let the price breathe. If they allow a deep pullback to happen, they are literally risking letting rival algorithms or even retail traders scoop up that asset at a massive discount. And they definitely don't want you getting a good deal. So instead of a pullback, they engineer something completely different. Here's our exact roadmap for decoding this today. First, the textbook illusion. Second, the physics of the spring. Third, decoding the visual signature. And finally, the execution protocol. Section 1, the textbook illusion. Retail versus institutional reality. There's a pretty brutal contrast happening here. Retail expectations heavily bank on those symmetrical ABC waves and healthy, deep breathing pullbacks. But the institutional reality, it's violent accumulation and completely choked out pullbacks. While sellers usually try to fight back and retest support during a standard pullback phase, these institutional algorithms intentionally step in and physically block them to steal that discount for themselves. All right, Section 2, physics of the spring, the structural mechanics. So what is actually happening under the hood? Well, a compressed AB spring kicks in when institutional buyers absorb 100% of the sell supply. The absolute second an initial impulse ends and sellers try to push a pullback, massive passive limit orders just eat up everything. So rather than dropping down into a nice pullback, the price is instantly choked out. It forms this incredibly razor-thin horizontal consolidation box and just grinds completely sideways. Now this builds what we call the deadly structural trap. Volatility gets compressed down to a super fine point. Retail traders see this frustrating sideways grind and they think, it's a reversal pattern. So they start aggressively shorting the wicks, hiding their stop losses just above that consolidation ceiling. But because there never was a pullback, all that missing wave B energy, plus all that trapped short energy, bypasses the drop and gets forcefully loaded into a highly combustible wave C trigger. The market essentially becomes a tightly wound mechanical spring, just waiting to snap. Let's move to Section 3, decoding the visual signature. Multi-panel sync. Since price is deceptively flat here, we use a decoupled 3-panel histogram layout to spot the trap. Take a look at panel 1, the volatility coil. This brilliantly exposes that institutional order flow is physically blocking the market. Normally, you'd expect to see a standard blue decay cascade sloping deeply down toward or below the zero line, right? But here, the histogram bars just rapidly flatten out. They lock themselves right up against that upper zero line, refusing to drop. And right on cue, your terminal's heads-up display is going to lock into a very specific state to warn you. It'll flash either high/tight squeeze or standard squeeze. This is your definitive signal that the market is desperately trying to mean revert, but is literally being blocked from dropping. Next up is panel 2, the Wave B profiler, or what we call the blocked footprint. The visual signature you're hunting for here is a histogram that goes completely dormant and flat. It's barely going to register any vertical displacement at all. The panel struggles to find any real structural depth, completely bypassing those standard deep or failed states you'd normally see. It is just a totally flat line. At the exact same time, keep an eye out for a time decay counter labeled is stagnant, which will start ticking steadily upward while the price is stuck going strictly sideways. This rising counter is giving you absolute mathematical proof that the pullback has been completely choked out by those institutional limit orders. And that brings us to the main event, panel 3, the wave sniper. This is literally the kinetic fuse. While panel 1 is totally squeezed and panel 2 is flat dead,
This third panel prints these tiny, microscopic dots directly on the zero line. And then, out of nowhere, it fires an outsized, ultra-tall, completely vertical green momentum bar. That violent rupture acts as a fuse, instantly forcing all those trapped shorts we talked about to cover at the exact same time, flooding the tape with massive buy orders.
So let's pull all these layers together into one operational matrix. Above the surface, on the price chart, you've got candlesticks just grinding sideways in a super tight, maybe 3 to 5 bar compression box right on top of a higher timeframe EMA, with very narrow wicks. Below the surface, panel 1 is locked in a high squeeze, refusing any downside yield. Panel 2 is dormant, zero structural depth allowed. And panel 3 suddenly slingshots straight vertically out of the zero line with maximum expansion. When you see all these execution layers line up, you're staring right at a live, compressed AB spring.
Which brings us to Section 4, the execution protocol. Tactical execution. Listen closely. If you hold out for a discount entry during one of these compressed phases, you are going to be left entirely empty-handed. To capitalize on this, you have 4 strict steps to follow. Identify the coil, isolate the fuse, pull the trigger, and manage the risk. Let's break those down. Here is the exact mathematical sequence you need to execute with total discipline. First, you alert your desk the very second price flattens above that higher timeframe EMA and panel 1 locks into a high squeeze. The spring is officially loading. Step 2, shift your focus completely to the Wave C sniper panel. You have to ignore the noise on the main chart. Step 3, you pull the trigger and enter the market with size. The absolute millisecond Wave C violently expands from zero. Finally, you manage your risk by dropping a structural stop loss exactly 1 tick below the floor of that tight compression box. And honestly, this highlights the true beauty of this setup. Because that price compression was so incredibly narrow during the sideways grind, your stop loss distance is microscopic. You are taking on microscopic mathematical risk, but you're trading into a completely uncapped upside target, fueled by the explosive release of all that trapped energy. So if you take away nothing else from today's explainer, sear this rule into your brain. When Wave A is squeezed and Wave B goes totally silent, Wave C becomes the absolute master of the tape. You've got to read the math, trust the compression, and execute on that explosive Wave C power, instead of just defaulting to old, outdated textbook assumptions.
Which leaves us with one pretty crucial question to think about. If you insist on holding out for a traditional textbook pullback in a market that's totally dominated by these institutional algorithms, are you just going to be left standing at the station while the market prints a massive vertical green wall? Something to think about next time you pull up the charts. Thanks so much for joining me to decode the live tape today, and I will catch you on the next explainer.